Governor of the Bank of South Sudan, Mr. James Garang, the Professor Ernest Arite, the Chair of the AERC, Professor Victor Morinde, the Executive Director, AERC, distinguished guests, invited speakers, panelists, researchers, ladies and gentlemen, good morning once again. I'm very pleased to join you this morning for the official opening of the 61st biannual plenary session by the African Economic Research Consortium. Let me at the outset express my gratitude to Professor Victor Morinde, the Executive Director of the AERC, for inviting me to this forum in the spirit of our renewed collaboration between the Central Bank of Kenya and AERC. It is my hope that the two institutions will continue to work together to enhance evidence-based policy decision making and policy outreach. I was just telling the two professors how when I was at the Treasury, when I was at the PS Treasury, we had very, very good working relations with the AERC. And we got really good training and very good staff working with you, training with you and coming to work with us. And some have even gone on to now work with the IMF and World Bank. And I have a feeling that that collaboration has slowed a little bit. But I'm sure now I think we should be able to take this a bit forward and really go back to that kind of relationship that we used to have. So this plenary has brought together leading scholars, policymakers, practitioners, and researchers, and has been convened at a very critical time when Africa is witnessing a surge in financial technology innovation. This makes the theme of this plenary, FinTech Revolution in Africa, not only relevant, but very timely. My remarks will focus on general aspects of FinTech development in Africa, with some specific references to Kenya's experience. Africa's increased mobile phone penetration and the youthful tech-savvy demographic have created a very fertile ground for FinTech solutions. According to BDO Africa FinTech Report of 2024, FinTech developments around Africa led by South Africa, Nigeria, Egypt, and Kenya are projected to grow 13-fold to $65 billion by 2030, with a projected compound annual growth rate of 32%. Leading this projected expansion is mobile money, dubbed as the continent's solution for the unbanked, enabling money transfers, payments, access to credit, and a variety of other services. Disrupting this model is the uptake of other products, InsurTech, making insurance more accessible and affordable. RegTech, tackling regulatory hurdles, paving the way for secure and compliant financial innovation across Africa. And WealthTechs, providing opportunities for the population to access local as well as global capital markets. This confluence of sub-industries is revolutionizing financial inclusion, democratizing access to essential services, and propelling Africa's economic growth. Closer to home, Kenya is renowned for its vibrant FinTech ecosystem, which has benefited from several key milestones. And allow me to highlight just a few of them. The first is supportive regulatory environment. Kenya is again renowned for pioneering innovative mobile money solutions, and notably M-Pesa, which was launched in 2007 with the regulatory support of the CBK. Mobile money, a pivotal component of the fintech landscape, revolutionized the financial services by enabling people to send and receive money, make payments, and access financial services through mobile phones, even in the remotest areas with limited and or no banking services. The mobile money innovation has been vital in promoting digital financial inclusion and paving the way for many other fintechs to thrive. Government support. The government of Kenya has prioritized digitalization as a key economic strategy under the bottom-up economic transformation agenda, underscoring the benefits of adopting digital technologies in service delivery and growth of key sectors such as agriculture, ICT, manufacturing, transport and trade, among others. The government is committed to continue positioning Kenya as a leading hub for entrepreneurship and innovation in Africa. Information of Kenya FinTech Association, this organization, which represents over 60 registered fintechs in Kenya, aims at playing a pivotal role as a gateway to Kenya's vibrant fintech sector. It serves as a resource and forum for education, information sharing, and networking between the companies, policymakers, as well as the general public. Kenya continues to attract investments by multinational companies in the technology and fintech sphere. For instance, Microsoft and Visa have made commitments to the country, with Visa announcing a new office for its Africa Development Center. Visa also launched its first innovation hub in Africa, the Visa Innovation Studio in Kenya, and Nairobi will also host the Microsoft Africa Research Institute, the first for Africa. Ladies and gentlemen, artificial intelligence and machine learning revolution is having a significant impact on the society. These technologies are becoming increasingly important in driving innovation and transforming our economies. Africa should not be left behind. In this regard, the banking sector in Kenya continues to adopt AI and ML to improve operational efficiency, predict customer behavior, and manage risks more effectively. In particular, the banks are already using these technologies in areas such as fraud, risk management, cybersecurity, customer service, and anti-money laundering, countering terrorism financing, and countering proliferation financing as well. Financial institutions have formulated comprehensive frameworks to govern risk, data science, and AI model development, including implementation of strong access controls, data anonymization, and encryption and due diligence for third-party service providers, among others. On its part, the CBK is currently ramping up its capacity to leverage AI and ML for advanced data analytics, including predictive analytics. And areas of interest include financial performance, stress testing, market trends, market conduct, and forecasting, as well as nowcasting. Ladies and gentlemen, based on the program, I take note of the fact that the central bank digital currencies and the link between climate change and fintechs will form part of the discussions during this forum. Regarding CBDC, the Central Bank of Kenya issued a discussion paper on CBDCs in February of 2022. The paper sought to assess the potential applicability of the CBDC in Kenya, highlighting the risks and opportunities. Comments from the public on the paper were received, and subsequently a report on the views received was published in June of 2023. The responses to the discussion paper indicate three broad themes that are critical, that are a critical outcome and which should be assessed prior to the decision to implement CBDCs. The first is people centricity, the second is country context, and finally the balance between opportunities and risks. The CBK continues to monitor developments on CBDC and collaborate with other key stakeholders. Notwithstanding the notable progress in the fintech space, there are challenges, and these include the following. Infrastructure constraints. While there is opportunity for fintech growth across Africa, in certain regions growth is restricted by infrastructure constraints. These include weak connectivity, mobile and internet penetration, electricity, connectivity, and limited payment rails, the backbone of all digital transfers of money. The second is the regulatory environment. Regulations vary significantly across different African countries, creating complexity for Pan-African fintech companies. Additionally, regulations are constantly evolving, requiring agility from fintech firms and concerns about data security and privacy are of course important, and while some countries have implemented data protection laws, enforcement remains relatively weak. Scalability. Achieving scalability can be challenging due to the fragmented nature of the African market. And fintechs often need to tailor their solutions to specific local conditions and regulations. Cybersecurity risks. As fintechs handle sensitive financial data and transactions, they are vulnerable to cyber attacks. Safeguarding customer information and maintaining robust cybersecurity measures is an ongoing concern. On fraud, although the effects of fintech fraud are often viewed from the lens of service providers, the loss has far-reaching implications on the society. Successful fraud prevention strategies built on strict compliance and identity verification measures are needed. On customer trust, the fintech industry is relatively young in the African context, and one of the challenges facing the fintech sector is to win the trust of millions of people who are either still unbanked with limited financial access or who view financial services as something that is reserved for the middle classes. As I close, I'd like to take this opportunity to commend AERC for its pertinent role in supporting capacity building and promoting rigorous research in economics in Africa. It is my hope that today's deliberations will shed more light on the opportunities and solutions to the emerging and persistent challenges as Africa continues to embrace fintech and other emerging technologies. So I wish you a fruitful deliberations, and thank you very much.